Hello, my name is Gregory Velasco. I am a mortgage loan officer in the state of California. Today, I will share informative information about the reverse mortgage program. Let's get to it. What is a reverse mortgage? A reverse mortgage is known as HECM. That's the acronym for Home Equity Conversion Mortgage. It is a federally insured home loan that allows homeowners the ages 62 years or older to convert a percentage of their equity into a lump sum of cash, a line of credit, a 10-year payment plan. This program also gives you the ability to buy a home and never make a mortgage payment. So, if you are 62 years of age or older, you may be eligible for this program to take advantage of the benefits. The reverse mortgage allows homeowners to live and maintain ownership of their house and never make a mortgage payment ever again. Some say this program gives tranquility throughout the retirement period and peace throughout your entire life by unlocking the power of this program. It sounds too good to be true, right? Let's dive into this program to have a better understanding and how it works. You're probably thinking, how is it possible to get a mortgage with no payments? Generally, when you take out a mortgage loan, the bank gives you a loan that you pay back with interest over time. Once you get to the end of the terms, you end up paying off the loan owing zero. Well, a reverse mortgage works the opposite. That's how it gets the name reverse mortgage. The bank actually makes payments to you. You can choose to receive a lump sum of money, monthly payments, a line of credit, or some combination of those options. And the biggest benefit a reverse mortgage is known for, the homeowner has no obligation to make mortgage payments for the entire homeowner or the homeowner's lifetime. Now, who's eligible to receive these benefits? Homeowners who are the age of 62 years or older, married couples, partners, could be family, friends, or anyone that owns partial interest in the property that meets the requirements. What about, could my younger spouse that is not 62 years of age receive the reverse mortgage benefits? A spouse who is under 62 can be added to the reverse mortgage program and receive the benefits. They may take advantage of these protections. What would happen if the borrower departed this life, deceased? After a borrower dies, any co-borrower on the loan continues to receive the benefits of the reverse mortgage, including loan payouts, the line of credit. A co-borrower can stay in the home for as long as they wish for, provided that they fulfill the reverse mortgage requirements. Before we move into the requirements, let's talk about the most common misconceptions. Here are 5 of them. Would the bank or government keep or take my home? No. Not true. The bank or the government does not keep your home. On a reverse mortgage program, you or your estate continue to maintain ownership and remain on title. The bank is not on title. When I pass away, would the bank keep my house? No. The bank does not keep your home. The heirs will inherit the home after the last surviving borrower passes away. The heirs will have the choice to keep the home by paying off the amount owed or sell the property and keeping the remaining equity after all the amount steps are paid. Will a reverse mortgage cause me to pass debt on to my heirs? A reverse mortgage is a non-recourse loan, meaning a non-recourse loan does not allow the lender to pursue anything other than the collateral, which is the house. This program will have mortgage insurance, which is a federal requirement. The mortgage insurance will pay the difference from the value of your home to what you owe if your balance is greater than the value. This is known as upside down or underwater. Ultimately, this is to protect the heirs as well as the bank. Will a reverse mortgage affect Social Security or Medicare? Loan proceeds are non-taxable. The proceeds do not affect Social Security or Medicare benefits. Is a reverse mortgage too risky? Numerous safeguards have been built into the program, including mandatory HUD-approved counseling, payment guarantees, capped interest rates, advanced disclosures, and a 3-day rescission period to cancel. Now, let's talk about the pros and cons behind this program. Pros. If you're having trouble with financial obligations, a reverse mortgage may come to help you. Here are 5 pros that may catch your attention. Your existing mortgage loan will be paid. You may owe on your house and still qualify for a reverse mortgage. The program will pay what you owe on your existing mortgage debt. You can keep your home or buy another house. Instead of selling your house to get the capital gains, you can keep your house and receive the cash benefits from the equity that has built over time. You can also buy a house with a reverse mortgage program, having the confidence of never making a mortgage payment ever again. Support a healthy, secured retirement. The reverse mortgage program is great for retirees who don't have enough cash savings or monthly retirement income. You may unlock the equity wealth built on your home by eliminating the monthly mortgage payment. This will help provide financial flexibility and may relieve many of the financial pressures that you may face. You won't have tax liability. According to the IRS, the money that you get from a reverse mortgage is considered a loan advance rather than income, which indicates that your funds aren't taxable, unlike other retirement income such as distributions from a 401k or IRA. You are protected if you end up owing more than the value of the house. This is known as upside down or underwater. If you end up owing more than the value of the house, you will never have to worry about paying the mortgage debt. Let's talk about the downside of a reverse mortgage. It sounds like there's many benefits. There are also some risks to consider. Let's check what's behind the scenes on the program to find out what the cons are. Here are 5 important cons. You could lose your home to foreclosure. To be eligible for a reverse mortgage program, you must have the financial income to pay the property taxes, homeowners insurance, and HOA fees if required. If you become delinquent on these expenses and default on the property taxes, you may lose your home to a foreclosure, not living at your house as a primary resident. The reverse mortgage program requires a homeowner to live in the house as his primary residence for the life of the loan. If you move out to live somewhere else, the loan becomes due and payable. There is a routine to monitor occupancy status. Other reasons the reverse mortgage will mature, meaning it becomes due and payable if you're gone for 6 months for a non-medical reason, if you are at a medical facility for more than 12 consecutive months. If this occurs, the remaining part of the loan must be repaid. Now, let's go a little more in depth to this part of the subject. It will get interesting here. If your spouse is added to the reverse mortgage as a co-borrower who can be listed on the loan documents along with the borrower, or an eligible non-borrowing spouse who is married to a reverse mortgage applicant but not included in the loan, they may be able to remain in the home if the primary borrower has violated the residency requirements. Despite that, it's important to contact a reverse mortgage counselor to review your financial situation and determine if a reverse mortgage is right for you. Your heirs could inherit less. A reverse mortgage typically requires a home to be sold to repay the debt. May you rest in peace, indicating you are deceased and there are no co-borrowers or an eligible non-borrowing spouse. Your heirs will need to pay the full loan balance to keep the home. Now, let's see it in a different scenario. If the property is upside down, meaning the debt balance has exceeded the value of the home, then the heirs will have to pay 95% of the home appraised value, whichever is less. Therefore, you have the option of paying the full amount, selling the property, turning the property over to the bank to satisfy the debt. In addition to a reverse mortgage, it eats away your home equity because there is no obligation to make mortgage payments. By the time it needs to be paid off, there may not be any equity left over for your heirs. It's not free. A reverse mortgage may cost more than a traditional loan. The closing costs are origination fees, other fees, and FHA protection with an upfront insurance premium. All costs are to get the loan processed and to ultimately protect the borrower, the heirs, as well as the bank. You do have the options of rolling this cost into the loan balance, but this means that you're going to receive less money. It may affect your Social Security income and your Medicaid eligibility. A reverse mortgage won't affect your Social Security payments or Medicare. What if you're receiving Medicaid or a supplemental Social Security income? A reverse mortgage may cause you to violate asset limitation. This may affect your eligibility for these benefits. You will want to talk to a counselor that helps you with these benefits, or bring it up to a reverse mortgage approved counselor through your session. Keep in mind, Medicaid eligibility varies from state to state because each state has its own Medicaid program within the federal guidelines. Now that we have gone through all this important information, follow me so I can guide you with the requirements to unlock this program. Live in your home as a primary resident, continue paying the property taxes, the homeowner's insurance, and the HOA fees only if your property requires to. And for final, maintain the home according to the Federal Housing Administration requirements. If you meet these requirements, you will need to complete a HUD-approved counseling session. There are numerous safeguards that have been built into the program. This requirement exists to assure that homeowners fully understand how reverse mortgages work and the financial duties that they convey. I would like to also share this prestigious information. The Reverse Mortgage Stabilization Act, RMSA, gave HUD the power to set requirements and restrictions. The act also authorizes HUD to institute requirements that keep the reverse mortgage program stable and consumer friendly. If you liked and value this information, please click on the like button. This will encourage me to provide more informative information. Your comments and opinions are important. This will allow our loving community to be open to having an adequate understanding. I have provided the links below for more information. U.S. Department of Housing and Urban Development, known as HUD. The language translation is available on the website. The Consumer Financial Protection Bureau, known as CFPB. The language translation is available on the website. I will be putting up more videos on financing and other subjects related to the topic. With this, you will be well informed on making adequate decisions for a better future. If you enjoyed this video, you will love the next ones. And if you absolutely want informative information by understanding how financing programs work, make sure you subscribe and hit the bell and turn on all the notifications. You'll never miss the latest informative video. I'll see you on the next one.